Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now let's just have a look at last Friday's non-farm payrolls. Really strong numbers, I've got to say. And you have that with the escalation of the conflict in the Middle East, and you've got a real double whammy, right? The markets are hugely caught on the wrong side of the equation here, right? Fundamentally, the dollar should be going down. Of course, the US non-farm payrolls were good, which takes a bit of pressure off the downside, but overall, things are moving south, right? The Fed's cutting rates, they're doing all the right things. This geopolitical event has popped up in the middle of nowhere. It's blown out a lot of long-term positions. And then you have the last nail in the coffin, which is a big tier one US number, like the non-farm payrolls. And you're getting all these short-term levels breaking, the dollar screaming to the top side, and euro, sterling, Aussie, Kiwi, all belted, right? It's a bit of a bloodbath out there. So, and if you just have a look at, well, just coming back, there's a few things to look at. The global markets, the US bond yields, no surprise, are up, right? Higher interest rates in the US, lower euro, sterling, Aussie, Kiwi, higher US dollar, right? The funny thing is, equities actually bounced on Friday, right? And it's, they put it down to the market sort of, being resilient and all these sort of, whatever they want to call it. But you know what? The numbers were really strong. Like I'm a little bit surprised, to be honest. Non-farm payrolls, 254, private payrolls are up. The unemployment rate was on the very low end of expectations. I mean, it's only 0.1% off the number expected, but even average earnings were up. It's like everyone's gone back to work to pay for everything that they've got. And it's fueling this strong labor market in the US. Whether that's a one-off or not, we'll have to wait and see. We've just had Hurricane Helena through last week. There's another hurricane coming. That may have an impact across the board, across a lot of the fundamentals. But right now, the US dollar is, making up some ground. If I can just get that right. Now the Fed, does it change anything for the Fed? Not at all, right? But what it does is it confirms the next move will be 0.25%, 98.5%. Now, that was almost a 50-50 for a 0.5% cut. That's another reason why the dollar has gone up. There's been a big unwind of the huge interest rate cut expectations from the Fed, right? So that's where we are at the moment. We do have this week, I'll go through the data in a second, the RBNZ, right? 95% chance of a 0.5% cut. So the Kiwis are cutting aggressively, and they need to do so to get their economy moving. So looking at the charts, right? You look at the hourly charts, and it's like, it seems like an easy move, but it hasn't been. And the price action after the non-farm payrolls, don't kid yourself, that was not an easy one to sort of just get into. Of course, this is the weird thing, right? This Middle Eastern conflict is escalating, and it is creating a bit of a safe haven US dollar trade. And then we've had obviously the non-farm payrolls on the back end of it, right? That's why the markets are elevated. For me, I think where the markets are at the moment, right? And I'm talking sort of the dollar index, dollar Swiss, dollar CAD for that matter as well, because oil has rallied as this next hurricane lines up. So that should be probably a little bit lower. But sterling, Aussie, and Kiwi, to me, these are temporary measures. If we had not have had the geopolitical event, you know what? The non-farm payrolls will still come out strong, but it's nowhere near the current levels, right? What I'm trying to say is the move has been exaggerated so much by this geopolitical event that it looks like the dollar's screaming topside. This may be the last bailout and clean out of all the short US dollar positions, which is great because the dollar's now got room to go down. But what we need this geopolitical event to sort of subside. Otherwise, we're sitting here sort of trying to work out exactly what's going on. All right. So it's a bit of a strange one. And, you're just going to sort of piece it together. So as we go through this week, right, there's some tier one, tier two, lots of data coming out across all time zones, right? You come into Monday, you've got, there's German numbers. You've got some retail sales figures there in the Eurozone. right? These are all numbers that would generally have some sort of impact on the market or influence over the overall direction. But this week, with this geopolitical event, it's not going away. Now, business conditions, industrial production numbers on Tuesday, uh, trade numbers, to me, they're just a waste of time. We do have coming into Wednesday the Kiwis cutting rates by 50 basis points, right? That's something to think about. You do come into Wednesday sort of trading. There's a whole bunch of sort of I was going to say tier three sort of numbers, not doing a huge amount. Now the focus for the week, and this is where we want that geopolitical event to calm down, is the US CPI numbers. This is the clutch number, right? That really tells us what's going on. Now the Fed are cutting rates. Don't think they're not. But you know what? If we get weaker numbers here, or that may sort of preempt the next move. If we get really strong CPI numbers, then what we could be looking at is maybe it's only 0.25 before the end of the year. The Fed have told us they are going to be doing a 0.5% by the end of the year. So anyway, we'll see how that goes. Ideally, we want this Middle Eastern thing or event, I should say, to subside a bit, and then we can focus on the fundamentals. Whilst that's cranking along, the fundamentals are going to be the driving, well, are just going to be sort of hidden, sorry. And we've got a whole bunch of stuff. Like the CPI number, it's the worst possible time to have a geopolitical event around the CPI numbers, right? And then you come into Friday, we've got, a bunch of UK data. There's the final inflation numbers out of Germany. And then you've got the Canadian employment numbers, right? So we've got some key things. Definitely Thursday, Friday, the best trade days as far as fundamentals go. But will they impact? I just don't really know, right? We'll have to wait and see how things are going internationally around these events. If you come back and have a look at the daily charts, just to wrap up, right? Now, yeah, there's a little bit of a correction here in some of the trends, right? The dollar's just corrected up. Euro is trending back down towards where it broke up. So is sterling. So these things, the long-term trends are not over just yet, right? It's not like this is a long-term uptrend in the dollar. I can't see it, right? But what we are seeing is they are getting back to some of these key levels, particularly the dollar CAD there. And it will be a showtime if we see further strength in the US economy and an escalation, a further escalation in the Middle East. Well, you know what? I'll have to eat my own words and the dollar will just keep going up, which is weird, right? Especially when the Fed are the one central bank that is cutting interest rates aggressively and have got a very strong plan to get these things lower. So to me, as soon as that Middle East thing's over, the dollar falls, right? That's what I'm sort of waiting for. So it's a bit of a cat and mouse game. It can be very frustrating because we are sort of sitting here waiting for the calendar to sort of the numbers to roll over. And we're waiting to see what impact the economic numbers have on the interest rate probabilities of the central banks. And that's all we could do at this stage, right? So now what date is it? The 7th, right? We've got 10 days till the ECB. They are cutting by 0.25%. It's basically 100% factored in. So are the Fed, right? And you got the 23rd of October, the Bank of Canada, 0.25, 83% factored in. No, RBA is still the odd one out, right? And I can't see them holding on much longer, but we'll see how the numbers drop. There's no major Australian numbers this week, so we're going to have to wait and see what comes out. It's really the US CPI numbers, as I was saying, Thursday are the key number here, and that's where your focus has got to be. And it's just a matter of like this thing in the Middle East. I know it's just going gangbusters at the moment, but the market will become desensitized to it very shortly, and they won't care about what's going on. But if it just settles down for a few days, then maybe we can just get a look at this CPI number and have a trading opportunity that does make a lot of sense. Okay, outside of that, it's tricky conditions, right? And that's what you get around these geopolitical events. Keep an eye on your news pages, updates, breaking news, all these sorts of things. And of course, keep an eye on the global markets. The raw numbers here, like the US bond yields, right? These are numbers that you can't sort of hide from, right? They tell us that the US dollar's higher. One thing is, if the equity markets are going up while the yields are going up, right, that's a bit of a weird cuckoo situation, and maybe time to sit back and have a look, wait for this event to sort of dissipate. Anyway, second week of the month, it's usually not too bad, right? And you don't have that big disruptive news. And we usually just focus on the US CPI, but the geopolitical sort of haze or cloud is hanging over the market and may make this a little trickier than it needs to be. Let's wait and see how it goes. And I'll try and keep you updated as best I can. All right, guys, have a good one. All the best. Cheerio.